So I kind of feel the need to make this video to kind of give you guys a heads up on some very potentially negative things that could be happening in this next upcoming week, especially regarding the CPI data. So that's what we're going to get into for a majority of this video. We are also going to talk about Tesla and where Tesla could go in this week, and this article from Barron's that is saying, quote, Tesla's battered stock looks like a buy again. And when you break down the numbers and compare Tesla to other automakers, it is the clear winner in 2023, guys. Now, let's get into this information. You guys know the deal. If you like making money, if you like Tesla, if you like trading the markets, this is the place to be. Hit that like button and subscribe to the channel, guys. So let's get straight into it. First off, with the concerns that I have, and the biggest concern that I have is CPI, but more specifically, it is the negative reading that we are expecting to get, because anytime we've had super low expectations, or I should say super high expectations that inflation is going to come down a lot, that's where we get disappointed. Now, it seems like maybe we could go into deflation in this next month over month reading, and that would be the month over month reading for December. We are expecting a 0.1% decline to inflation, so no more increase. We're actually expecting deflation on a month over month basis, and that's a pretty big deal. That's a pretty big change for inflation. And I get it, it makes a lot of sense. December, you've seen a lot of sales, you've seen a lot of people trying to offload inventories at lower and lower prices. But when the expectations are so low, even if you don't drop that much on inflation, even if, let's say, we get a 0% reading on inflation, well, that's still bad compared to a negative 0.1% expectation, or the more likely outcome that we come in line with the numbers from last month at a 0.1% increase. That would not be good. That would be very, very bad. So really, this next week, the question should be in your mind: do you think we experienced deflation in December or not? And to what degree did we experience that? Because if the overall inflation rate month over month is decreasing by 0.1%, then that's a serious amount of deflation, especially on a year over year basis. That would be negative, right, over 1.2% to inflation. So if that pace were to continue, you would be in massive deflationary territory, give it 1 year's time. So actually a 0.1% negative reading on inflation is kind of a big deal. If it comes in lower than that, guys, you're going to get a face ripper rally. The lows are probably in for 2023 unless earnings totally collapse. If earnings totally collapse, that's a different story. The stock market's always going to trade on fundamental valuations. Give it enough time. 2022 is kind of the year of people fearing Fed policy and where the economy would go. Well, now we're in 2023 and we're going to see where the economy is going, and that's going to be the biggest thing. Inflation is a big deal as well. As long as it continues on this trajectory and we can meet these expectations, it's going to be positive. But that's the real warning here, is that you're expecting a lot of deflation for the month of December, guys. So there is that, just to run through all of the numbers and the expectations for you guys once again, and this will be coming out on Thursday, 8:30 in the morning. Inflation rate year over year, we're expecting 6.9%. Last month's reading was 7.1%. Core inflation rate year over year, all of these coming out at 8:30 in the morning, so I'm not going to repeat that over and over again. But the core inflation rate year over year, we're expecting 5.9%. Last reading we got was 6%. Inflation rate month over month, this is the headline inflation rate month over month. That's where you're expecting a negative 0.1%. Last month's reading was a gain of 0.1%. And the core inflation rate month over month, you're expecting a 0.1% reading. Last month was 0.2% of a gain. So you are expecting a lot out of CPI. If we don't get that, it's going to be pretty bad, especially since we have seen this rally in the first week of 2023. It set us up for a little bit more downside if CPI does not play along. But from my overall experience in the economy, it looks like there was, a lot of sales, a lot of people offloading inventories, like I said. So it's possible you could get massive deflation in December. But is it probable? I don't think so. And that's only my opinion. We'll see what happens with the numbers coming on Thursday, but that's the big warning. If you do have a lot of calls here, risk to reward does not look to be in your favor, especially after gaining almost 2% already for 2023, guys. So that is that. That's the big warning. Now, as far as Tesla stock, and this Barron's article says Tesla's battered stock looks like a buy again. And if you look at some of the numbers, they're compelling. So Tesla's more profitable than its competitors, an advantage it will use in 2023. And you got Tesla here, BMW, Ford, General Motors, and Toyota. You could see the 12-month change for Tesla, 69.6% negative, BMW 6.2%, Ford 48.2%, General Motors 44.2%, and Toyota Motors 31.2%. These are all negative changes on the 12-month basis, and this is for the stock price. Now, if you look at the PE ratios, obviously Tesla is going to have the highest P ratio. Tesla for 2023, the full year expectations for earnings has a set of 21.4 PE ratio, which, granted, is lower than Apple, is lower than some other companies, guys. So in the grand scope of things, it's not that high at 21.4. Actually, the markets itself, the S&P 500, traded at a 22 times price to earnings ratio in 2021. So these numbers are not crazy at Tesla's current share price. Now, BMW expecting 6.4% PE ratio. Ford Motors 6.8% PE ratio. General Motors 5.9% PE ratio. And Toyota, you're expecting an 8.2% PE ratio. Now, this is where things get a little bit more telling for Tesla, and the numbers make a lot of sense to why Tesla is valued higher. So 2023 end of year operating margin expecting 18%. BMW 9.6%, Ford 6.5%, General Motors 6.9%, and Toyota 8.3%. So Tesla is over double the next highest automaker, which is BMW. They're double BMW's operating margins. So that gives Tesla a lot of room and to kind of, drop prices even if they need to spur demand. And that's a lot of the argument in this article, is saying that Tesla can afford to drop prices compared to other automakers. Other automakers, just their profit margins, right, do not have the availability to drop prices in a substantial way. Even if a recession comes, they're going to be the ones that are hurt a lot more than something like a Tesla. And considering Tesla's share price has fallen 72% from its all-time high, it gives it a lot of flexibility, and considering you're at a much lower valuation now. Now, if you take a look at 2023 free cash flow in the billions, you're expecting $12.2 billion of free cash flow for Tesla in 2023. 7.5% of free cash flow, $7.5 billion for BMW, $3.7 billion for Ford, $5.5 billion for GM, and $10 billion for Toyota Motors. That's actually a surprising number to me for Toyota, but nonetheless, $12.2 billion of free cash flow, much better than these other companies. But what's the main difference that Tesla has between all of these automakers? Tesla has higher growth than all of them combined. Most of these guys are in the range of 2 to 5% growth expectations for 2023. 2 to 5%. Some are lower, right? Ford, GM, we're expecting 1.5% growth out of them. Ford, you're borderline negative. right? Even Toyota, you're only expecting like 2.5% growth for 2023. For Tesla, we're expecting at the bare minimum, and this is kind of my expectation, not really my expectation, but kind of where the stock price seems to have its expectation of around 35% growth for 2023. It's been discounted so much that if we got 35% growth year over year for Tesla, I think it's at a fair valuation, more or less where the stock sits today. Now, if you start talking 40 or closer to that 50% growth target where Tesla has its own sight set at, then the stock is grossly undervalued where it's currently trading at. And that's the big difference. Tesla's growth rates are off the charts compared to other typical automakers. Now, quote, arguably, if Tesla cuts prices, it's a worse situation for their competitors, given many struggle to make any profit, explains RBC Capital Markets analyst Joseph Spack. What's more, Tesla is only one of two automakers that makes a profit off EVs. The other is BYD, and that's obviously the Chinese manufacturer. Everyone else is losing money. Even General Motors, which sells a $110,000 Hummer, has targeted EV profitability by 2025. Others like Toyota appear to be getting cold feet in the rush to meet EV demand that may not materialize. And that's a big deal as well. If you're a long-term investor in Tesla, even countries are banning the sale of gas vehicles by a lot of them 2030. A vast majority of them all by 2035. There's not going to be much of a gas vehicle market left by that time. And really by, 2028, 2029, 2030, until 2035, that's where I expect to see the highest levels of growth for Tesla and the highest levels of profitability. And that's really why you're buying Tesla today, is for those boom times, right? End of the 2020s to the beginning of the 2030s. That's the overall time frame that you should have. I get it, 2030 is 7 years away. 2035 is 13 years away. This is a long-term investment if you're buying Tesla. Now, I do think short-term, obviously, there is a lot of opportunities, but that's one of the biggest reasons why I am so bullish on Tesla, is the simple fact of countries banning gas vehicles by 2030 and 2035. I think that gives Tesla a massive opportunity, especially since they have the best technology and they are first in their class. You really can't even compete with Tesla as far as other automakers. Now, this says Friday's news that Tesla will be cutting prices in China underscores the current dilemma. Tesla has been focused on growing production. It plans on making 2 million cars in 2023, up from 1.4 million in 2022, triggering concerns it will make too many cars and then be forced to cut prices to sell them all. That seems to be what's happening in the world's second largest economy, where Tesla cut prices for its Model 3 by 14% and Model Y by 10%. Those price cuts, which may be coming to the US in the future, will hurt its profit margins, and Wall Street's per share estimates or earnings estimates for 2023 have already slipped 10% since the end of September. That dynamic puts Tesla in a bind. Tesla will need to either reduce its growth targets and run its factories below capacity, or sustain and potentially increase recent price cuts globally, pressuring margins, writes Bernstein's analyst Tony Sakawi, who rates the stock underperform. That's obviously that's the worst argument you have for Tesla. I will take that. I will take that all day, guys. So that is pretty much it for this video. We covered the two things that I really wanted to cover. In the week ahead, though, for Tesla, let's talk where this stock could actually go. If all things are positive, CPI is good, everything's good, I think you could really start to target that 150 range again. I think you could see a very massive bounce off of CPI bank earnings. If they're positive, it could be a very, very good week. If they are negative, you want to watch that $100 level for Tesla stock. But I will say Tesla on the RSI, I've talked about this in a couple videos now, is at its most oversold level it has been at since before the pandemic, right? It's down in the gutter. There's no question there. And what happens when stocks are down in the gutter? If they can even prove that, hey, we're around, we're growing, we're doing okay, then the stock will be due for a massive bounce. Think about Facebook or Meta, whatever you want to call it. That stock has bounced aggressively for what? Really no reason. Their situation hasn't even got much better. Obviously, they're laying people off. They're cutting costs. Doesn't even matter. The stock's rallied like 45% in 2 months. And I think Tesla could be due for something similar, guys. So that is it for this video. Hit that like button and subscribe to the channel if you like making money, or you like the markets, or you like Tesla stock. Thank you guys for watching. Enjoy the rest of your Sunday, and I will see you in the next.